Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host, and I'm glad to have you back. If you wouldn't mind, if you haven't already done so, if you could please subscribe to the podcast that's on any one of your favorite channels, probably 30 altogether, right? Apple, iTunes, iHeartRadio, you name it, it's out there. So if you could subscribe, that would be great. Now, while you're out there, this is really important because it's timely. Is visit globalinvestoragent.com, click on the Learn More button, particularly if you're a real estate agent. And the reason is the markets are shifting, and one of the best things you can do to not just survive but thrive is to learn how to work with the right investors. Okay, you'll learn how to do that by clicking that button. A great way to have a full, more rounded model to serve the public, so your income's not going up and down. And if you're an investor, obviously you can go there and select an investor agent, and we have them both in the U.S. and Canada. So feel free to do that. And meantime, though, we have a great guest today, Kurt Warner, for speaking of Canada, from Ontario, where I used to live. So Kurt, wonderful to have you here. Thank you so much for joining us.
Thank you very much, Gary. It's a pleasure being on your show.
Well, I'm looking forward to this because we have so much in common as far as our background and investing and so forth. So I want people to recognize, we're listeners in 30 different countries. Canada is a wonderful place to invest in because the values usually go up more. They're so much better, and the lending culture is a lot more disciplined. So it's a lot smoother, easier, and you can build quite a portfolio and build a little bit of a nest egg for yourself. So, if you wouldn't mind, Kurt, maybe let's start at the beginning. How did you actually get started on all this? What path took you to this point?
I actually started in real estate before I even knew I was involved in real estate. And my mom actually, when I went to university, she had a couple rental properties. So I actually started managing those properties from university. And so I went to Brock University in St. Catharines, so Niagara region, which you're familiar with. And the properties were on the other side of Toronto. So quite a journey. So I learned a lot the hard way. Had some bad tenants I had to deal with. That weren't paying rent, that had to, figure out how to get them out, and new tenants. But I was able to learn a lot and also generate a little bit of income while in university. So that was awesome. But I had no idea that I was actually involved in real estate. I was just trying to help my mom out. And then after I left university, I started working for a company that taught people how to invest in both real estate and financial markets. So a couple of years in, myself and 3 other colleagues decided to invest in what you would call in the US a foreclosure property. But in Ontario, it's called a power of sale. So we invested in the property. We purchased it for, I think, about $590,000 and had it appraised at $740,000. So we're thinking, this is awesome. Real estate is the best vehicle ever. We're going to make a ton of money. And we made a couple novice mistakes. We didn't have the right agent representing us. And we didn't stage the property either. So it was a beautiful home, beautiful street, but no staging, no furniture, no curb appeal. So we actually ended up losing money on the deal because we had got it 100% financed through a hard money lender. So again, no money into the deal. So great entry, but our execution didn't work. So that was my first foray into real estate investing. And that was back in 2007. So from there, I decided to turn to financial markets, and I traded actively from after the financial crash. So my first trade was like February 27th of 2009, and traded actively until 2017, but realized that I wasn't actually creating a legacy for my kids and family. It's not something that I can pass on the knowledge, but I had nothing tangible to give to them and then grandkids, et cetera, moving forward. So in 2018, myself and two my good friends were kind of sitting and having lunch one day. And I think we were all frustrated with kind of that 9 to 5 grind at the same time and really looking for something else to do. And we decided to actually start investing in real estate. So we actually took some courses, worked with some mentors and coaches, got incorporated in December 2018, and got our first multifamily property in April 2019.
Nice. Okay. Yeah, it's interesting. The time frame that you were in, starting back in 2007, of course, in the U.S., there was a major recession that was beginning in the latter half of 2007, and it lasted for several years. And but up in Canada, I was at the time I was up there teaching, and it really things were just continuing to escalate. The values, everything it was boom time. I mean, the sprawl, the spread going from Toronto out all the way to where I was living in London was amazing. If you go to London today, you wouldn't recognize it compared to 15 years ago. I mean, it's just all the farms are being developed, and now they want to get the what's the train they want to go out there?
The Via or the GO train.
The GO train, yes, yeah. Yep. And I know that's a big project, and I think when that's completed, it'll really change forever the landscape of no pun intended, the landscape of London. But there's always there's good comes out of everything as long as you have the right perspective. So let's go back to some of the properties. Maybe that first one you did 100% financing. And what's interesting is when you think about that as well, you don't have any capital at risk, but at the same time, you generally do end up putting some money into the properties and certainly time and energy. So what was it, do you think, that was just too over leveraged, or for educational purposes, kind of describe how that unfolded and what the lesson you learned was,
So there are a lot of lessons to actually unpack into that one. One was, your network is your net worth. So we actually didn't, the property was not listed, obviously. And it was just through relationships that we actually found it. So I would suggest for anybody out there, whether you're a new investor or you're an experienced investor, continue to build your network. And I'll talk a little bit more about that later if it comes up, about the importance of that and finding like off-market deals, which is what I'm focusing on now. But so that's the first lesson that we learned. The other one is that you really don't need your own money to invest in real estate. I think what holds a lot of people back, they have this desire to get into real estate, and they think, well, I need to save for the next 5-10 years to buy one duplex or buy one triplex. And I think people just tend to think too small, and they don't actually realize a couple of things. One, everybody has access to capital. And if it's not yours, like if you've owned a home, for example, especially if you're here in Canada, our market has appreciated so much over the years. In fact, the city I'm in, I remember moving here because it was relatively cheap to other parts of the GTA, but house prices back then were like about 350 to 400,000. Now those same homes are going for like 1.5, 1.8. And that's after a 20%, 25% correction in our market, in 2022. So definitely, if you do have a property, you can leverage that and actually invest that money that's kind of sitting dead in a property that you have, that you live in, to use for real estate. And if it's not you, maybe it's friends, family. And there's also private lenders out there that are looking for a return on their investment, whether it's through their retirement accounts or whether it's through their savings. So, I think that was another lesson, is that you don't need money to get into real estate, but you do need knowledge and you do need education to make sure you do it right.
Yeah, no, if you don't mind me asking, are you up closer to Barrie? Are you that far north of the city, or closer in?
No, I'm west. So I'm in Milton. So I'm about half an hour outside of the GTA. But the other thing, we invest north. So we actually invest about 4 hours north of Toronto, up in Sudbury, and then even further into Timmins.
Okay.
So, yeah.
Excellent. Well, I like the fact that you're willing to spread out that far, because a lot of investors, I know when I first started, man, I was thinking, gee, it has to be within 15 minutes of where I'm living, but that's really, really restrictive. And if thankfully I had a couple of good mentors along the way who were patient with me, because I'm notoriously stubborn. And I just couldn't see how I could invest, more than even an hour away. But the reality is now we can invest almost anywhere and everywhere with the availability of information and the technology and the networking that we have with people. And like our team, for example, the Global Investor Agent team, we have agents in 26 states and 2, maybe 3 Canadian provinces. So it gives us confidence to invest in those areas, because we have people there that we know, we know that they're trained and educated. And it just opens up the world of possibilities and expanding markets. I mean, there's so many markets in North America, both US and Canada, that are expanding, and those are the ones you really want to kind of tie into, so you ride that wave up, So,
No, absolutely. And I think, from an investor standpoint, I've spoken, I've coached, several different investors, done trainings. And, when I tell them, especially people that maybe have one property, maybe two, and they're like, okay, well, I need to invest in this market because if there's a problem, I can go see it. And I'm like, I've invested in properties. I've seen pictures of properties that we own in our portfolio that I'm like, is that ours?
yeah.
Because what I focus on is the numbers. What I look for are markets that can either, provide good cash flow, because that was our goal. Our goal was to buy multifamily commercial properties at cash flow. So I'm only looking in markets where, prices compared to rents are favorable to generate positive cash flow. So when we started out, we actually kind of looked at different markets. So we did look at places like London and Windsor and around the GTA, because that's where we lived. But when I was analyzing deals, I was realizing like some of them are okay. But when I started looking up north and on the East Coast, I'm like, okay, these properties can actually make us a difference. They may not appreciate in markets like that as much as they will in the GTA, but Canada has a very strong and stable economy and has, like you mentioned, what happened in the US in 2007, and Canada's, market continued to go up. So looking at the stability there, if we can generate more cash flow, improve the value of the building, which how it's going to be assessed when we're trying to sell it to an investor, we're going to be better off. So that's really how we ended up investing in Sudbury. And as you mentioned, a team, like you have, people all over the world. So when we invested in Sudbury, we went up and met our realtor, which is a critical component of any investor's team. You have to make sure you're working with good realtors. So we were fortunate where our realtor actually flew back from Florida on vacation to show us several properties in Sudbury, and it was in the winter. So I think he came back in January. So he showed us several properties. We built a really good relationship. We actually had one property under contract at the time that we actually did a walkthrough and decided not to invest in that one. But we ended up finding our first 6-unit property during that trip that he ended up showing us, just, really getting to establish that relationship. And then even beyond that, he introduced us to our property manager, our first mortgage broker as well, that we, still utilize to this day.
Yeah. Well, that's amazing. Well, all right. So let's talk a little bit about the property management part of it then, since you mentioned it. And what's interesting is your first experience was sort of, you were volunteered, I guess, by your mom. Now, was that property, you said it was on the other side of Toronto. Did you mean like going up the lake, up like Kingston and up that area, or
not that far? So it was just in Scarborough. So just right outside the GTA, but it was on the border of Scarborough and Pickering. So from where I went to school, we're talking about an hour and 45 minutes roughly drive away.
Yeah. We're a university student. You had the time for that kind of drive. That's okay. Well, tell us about the experience. What was some of the lessons there? What was the problem? I think you mentioned they weren't paying rent, but what was the process you went through to correct that, so everybody can kind of get a real feel for the work part of this whole thing we call real estate investing?
Yeah, and I will by no means say I'm a professional property manager. I have had experience doing it, but really just for condos, single family homes, and a townhouse. Mm-hmm. And with my experience, the most important thing is to make sure that you qualify the tenants properly. Mm-hmm. Don't just, trust, hey, I have a job, call their employer, call their previous landlord. And one trick that I learned the hard way is don't call their existing landlord, because if they're a bad tenant, that landlord probably wants them out anyways, but call a previous one that they're with. The other thing that I've learned over time in general is that it's not so much the answer you get, but it's if they answer. So if you say, well, could I get references from your last 2 places that you lived? And they're like, that's a clue. If you ask that question to somebody that has, good references and they are a good tenant, they're like, absolutely. Do you want 3?
Yeah.
Right. So that was definitely one lesson. And also a couple of mistakes that I made the first time. I think it was the first year I was doing it, particularly with the tenant that wasn't paying rent. And back then it wasn't simple e-transfers. It was, a check. So I'd deposit the check, go to the bank, the check would bounce. I'd call him and he'd say, "Oh, I just need a couple days. And can you meet me? I have cash." A lot easier in these days than it was back in like 99, 2000. So it would actually go to meet him to have cash. So I think one of the things that has helped is definitely technology. But I would say for any investor, and I've had this conversation with several people, don't manage your own properties unless you want to become a property manager that also manages properties for other people and do it as a business, because you're going to end up spending more time than you want to. You're going to have to deal with the headaches. You're going to have to deal with the calls late at night. So ideally, if you are investing, especially when you're getting into multifamily, hire a property manager. And don't make the mistake of, looking at a listing, getting the income and expenses, and not factoring property management costs into it. Mm-hmm. Because at the end of the day, if let's say that you do factor property management in a lot of markets we invest in, we're looking at anywhere from 7 to 10%. So let's say you factor in 10% and you find a property manager that's going to do it for 7 or 8, that increases your cash flow. And if it's a property where maybe you don't need property management for whatever reason, then that increases your cash flow even more. So that would be my advice when it comes to property management is don't try to manage your own properties unless your goal is to actually have a property management business.
Yeah, that's excellent advice. I know so many investors that started off, they're trying to get the best deal they can. And sometimes, there's, it gets competitive in certain markets. And mm-hmm. one of the first things they'll do is they'll eliminate the projection for property management, or in their pro forma, they won't include property management, which is a shame, because number one is, if you're going to manage property, whether it's your own or another's, that's separate than ownership. You mm-hmm. get paid as an owner by receiving profit, but a property manager, you should be paid a fee or a salary or a percentage. But a lot of them do, they'll say, well, I'm going to do it myself and save the money, but you're still putting in the time and the effort, and that's worth some form of compensation. And mm-hmm. again, I'm guilty of that too myself, by the way, in the beginning. And I realized why my mentor kept saying that is because I did build a nice portfolio and I got to the point where I did need help. Mm-hmm. And that's when I started accounting for that in my pro formas. And thank goodness I did. And the older properties, I'd owned them long enough, the rents had gone up, we were able to compensate. But at the same time, I would have been much further ahead if I'd followed the advice you had just given right from the beginning, And the key distinction was separating the roles of management from ownership. Mm-hmm. And absolutely, ownership will always make more than management. Management is usually a fixed amount, like you said, 7%, 10%. Mm-hmm. But because of the time involved, you're taking time away from investing, which actually makes you more money. So Now, having said that, this ironic you mentioned, unless you're going to manage for other people, and I actually did just that. I built my own team internally, people that can do the cleaning and the painting and the maintenance and repairs and the showing the vacancies. And it occurred to me, I'm thinking, my gosh, I could actually can package this up as a business and offer it to others. And that's exactly what I did. And the property management business actually, over time, actually outperformed. I built a brokerage company too, out of the investor business. And the property management business actually ended up outperforming the brokerage business because we had so many clients coming to us and we got all those leasing fees, and I didn't do the work. I just ran the thing, But at the end of the day, when it's all said and done, all those properties I bought eventually were, paid off or had paid down so dramatically that I was able to use that as my own bank and borrow against myself, so I was in control. I certainly borrowed from others, but leveraging the equity in my properties, and was able to get better deals. It was able to manage my ratios and things like that. But so let's go back. I want to kind of come back full circle, if you don't mind, and talk about the acquisition part of it and the fact that you really don't have to have money to buy real estate. There are ways, at least 30 different ways that I can think of to do that. But if you wouldn't mind sharing, what's one of your favorite strategies for acquiring a property as far as how you structure the deal and get the financing, if you don't mind sharing, I just wanted to take a moment to say thank you for participating in the Massive Passive Cash Flow podcast. Also wanted to let you know that the book Global Investor Agent is officially out in print and in Kindle. on Amazon. You can get it by clicking on the link right here. If you are an agent, definitely grab yourself a copy. This book, guys, was not just written by me. I also included 8 other investor agents from around the country. And I didn't just handpick them. I literally opened it up to the entire audience. And it was first come, first serve. So you're going to get feedback from brand new agents all the way up to top 25 team leaders. Some on my team, some are not on my team, with valuable insight and instructions and guidance and actual checklists to follow to not just survive, but thrive in this market. I know you're looking for that advantage, and this is it. By the way, if you are an investor, grab a copy for your agent. And for everybody, all profits from the sale of the book, Kindle and print, all go to the Healing House Foundation, 100%. Thank you for doing that too, guys. Let's get back to the show.
So one of the things that we've done, we've always used from the very beginning, we started off as probably a lot of investors do that realize just using home equity lines of credit. So we would borrow off personal residence to use for the down payment. And we did that for the first couple. And then after that, then we had to start reaching out to other people that were in situations. So, one of the things that I believe, if you are an invisible investor, likely you are a broke investor. So you do have to, attend networking events, create content like podcasts, be active in social media, whether it's in joining like Facebook groups and things like that, to start to build relationships. And you will be amazed that if you actually tell your story and just be authentic, like if you're new to it, say, hey, I'm new. Because a lot of investors like us remember, when we were trying to get the first one done. And I think we have kind of, a soft spot for trying to help new investors. So what we did is using HELOC money initially, and then we started reaching out to other individuals, whether it's friends, family, or just people that we met that wanted to invest. Now in the position, just building those relationships where we do have a relationship with somebody that's what they do. They raise capital to then lend to investors to invest in property. So like right now, we're looking at how many units? I think it's 44 units. And it's a great feeling to, be looking at properties and not have to be wondering, okay, where's the down payment money coming from? So now we can just focus on, okay, how can we structure this deal so it makes sense for us, makes sense for the seller, and makes sense for, the private lenders as well. Yeah.
And what's interesting too is I'm sure you've discovered or are discovering this. In the beginning, when I would borrow, I would actually try to borrow from banks because even though it was a big process and it's everything's public and they really run you through the ringer. The fact is their rates and terms were generally better than private money. However, with private money, you can be more flexible in how you structure things. But what I'm ultimately getting at here is over time, it's if you play the game of Monopoly, you build up and you build a portfolio. Now, what I did is I did not trade up. I didn't sell one to buy another one. I did what you're describing, which is I kept the asset and borrowed against the asset. Mm-hmm. And over time, it was probably a couple of years in, maybe 10 properties, I realized, I said, my gosh, I'm actually in quite a nice position here. I've got a lot of equity. And I found a lender who was a commercial lender that decided to lend to me privately because I had a track record. And here's what I'm ultimately getting at, guys, is when you have a track record, you show a series of successful decisions and, improving your bottom line, growing, you're building wealth and income. You no longer have to go find the financing. The financing will find you. I mean, literally people will call me up and, hey, I'd like to take you to lunch and talk about your portfolio. And it was amazing when I realized the position I was in. So in any case, if you've experienced the same kind of thing where it actually gets easier, the more you're at it.
It really does get easier. And, building relationships, like we, have always gone through a mortgage broker for initial acquisition. One thing that we found, it provides us with more options and, again, working with a strong team. So, we have a mortgage broker that's essentially trying to sell our deal to, whether it's, A lender, B lender, community bank, whatever the case may be, on our behalf. Now, obviously they're getting paid to do that work, but we're leveraging, their skill, their network to get our financing. And then what we've done, similar to you, is actually gone back and refinanced traditionally. So we're pulling some equity out. Now, when we're dealing in the multifamily and commercial space, the lenders are looking at the numbers. So, for example, like we've bought, 6-unit buildings, duplex, and we actually bought a church that was converted to a daycare, which is an interesting one. But just improving the net operating income of those assets then provides more value when it's being underwritten by the lenders, and then we're able to pull some equity out, which is awesome. So, I think going into deals, one thing that we definitely do now, and I suggest everybody to do, is don't just look at your acquisition, but look at, okay, what's your strategy going to be to actually increase the value of that property?
Yeah.
Are you purchasing it where it's vacant? Are you living in an area like in Canada, for example, in Ontario, you can't just evict a tenant. The process can take quite a long time. However, if you're investing in Alberta, you don't have the same restrictions. So if your strategy is to, increase rents, which obviously increase the value of the property with your net operating income, then go in saying, okay, my goal is to work with my property manager, maybe do a strategy like cash for keys if you're in Ontario, to try to actually get some tenant turnover of the units that are, paying well below market rent. And then that way you're increasing the value of the asset and increasing your cash flow. So that's really our strategy kind of moving forward, is to do that, over and over again. And anytime you can add value, it's awesome. There's even simple things you can do, like as new tenants come in, looking at making sure either you're buying a property that is separately metered. So each unit has, their own hydrometer, and passing that expense on to tenants. That alone will dramatically increase the value of the property. So if it's not separately metered when you buy it, you need to evaluate before, what's the cost to have it separately metered? What's going to be the impact, to my CapEx expense? But then what's the return, the long time, when it comes to my cash flow? Increasing the rents, obviously, and at the same time, passing that expense on. So there's all these little things, I think, as investors that, new investors don't really think about, but I certainly try to convey that to anybody that, I'm talking to. Like, I'm part of a community, myself and a couple other investors kind of started, called Thrive Community, where, we do 2 free sessions on like Wednesday where we'll do like deal analysis. So investors can bring anything from like a single family home. I think somebody brought like a 52, 53 unit property, where we'll actually run through the numbers, but we'll also look at the strategy and talk about, okay, does this deal make sense? Could it make sense? Is there potential for the seller to hold some financing, and evaluate that for them? And then on Saturdays, we'll do, sessions on whatever topic our community wants to know about. Last night, we did a session on foreclosure. So, and I think next week we're doing short-term rental. So we're really trying to give back and to actually, help people that are either new, intermediate, and even sometimes some advanced investors. They're there because you can always learn. You can always pick up something new from others. So I think that's very important, to kind of share, is always have not only your acquisition strategy, but have your 6-month, a year, 2, 5-year plan for that asset. So you're not kind of reacting as things happen, but you're just kind of following and taking the actions that you planned from the beginning.
Yeah. I really like that explanation. I appreciate that. Now, you mentioned early on that you do some coaching. It sounds like you've got a free session that you put on once or twice a week. Tell us more about that, because I want people to really look into and explore and discover all that Canada has to offer when it comes to real estate investing. So what, I mean, is this community, you meet online on Zoom, or is it in person, or a combination, or?
Yeah, so we started the community back in November. I think we're already up to about 600, I think nearing about 600 members. Wow. And, initially what we were doing is just, 2 Zoom webinars a week, one on Wednesday evening at 8 Eastern and one Saturday morning at 9:30 a.m. Eastern. And just really sharing our knowledge and answering questions from our community. As we move into this year, we're actually going to start providing, and really the feedback from our community is they want more formal education on strategies like raising capital, foreclosure, creative financing, multifamily, wholesaling. So we're going to start bringing actual paid training as well, both in person and also online. And in addition to that, we will be doing some one-on-one mentorship as well throughout the year. So we're just really starting to kick that off. And the other thing that I do personally, I also coach and mentor entrepreneurs, whether they are investors in real estate, which most of the people that I've kind of worked with to this point are, but entrepreneurs in general, on how to create balance in life. And a lot of it is, understanding how to delegate, understanding how to prioritize what matters to you. Because as investors, when you're starting out, especially, you can spend all your time doing everything, hunting for deals, trying to work with, the banks directly or lenders directly. And what I found, it's important to create relationships, respect those relationships, and how to actually utilize them so you're not doing the work. So, the 44 units that I said that we're working on right now was actually due to a relationship. Somebody called me and said, "Hey, would you be interested in 44 units in Northern Ontario?" I'm like, "Yes, I would." So it's just that relationship that I had over several years, and that's it. So yeah, we do try to provide a lot to kind of help people, and for anybody that wants to invest in Canada. We do have several of our mentors, coaches that are Canadian that have invested in the US, lived in the US, understand what it takes for people in the US and to invest in Canada. And I think for people in the US, it does provide another opportunity. There is, certainly the US, there's a lot of markets that are lower priced than Canada. But I think when it comes to that stability, when it comes to banking and the economy and everything like that, there are definitely some opportunities that could be great for Americans to invest up here.
I agree 100%. And I know people that do invest across borders, go in both directions. And it's not as hard as you may think. It's not that complicated. I mean, both countries are almost completely reciprocal. I mean, they share information. It's amazing. When they built the 407 up there, I had my US, I had a couple different versions, Easy Pass. I had like 3 or 4 of them because I'm all over the country. I got up there and I thought, well, I'm on the road now. My GPS took me there. I might as well stay on it. I'm sure I'll get flagged or something. And the cool thing was I got the nicest letter in the mail. Like in the States, if you go through a toll road, but you don't have the right pass, they'll send you a threatening letter. But in Canada, it's very polite. It's say, "Hey, we understand you were on our road. We hope you enjoyed it, and would you please remit back to us, $27 or something." I thought, how nice! It's amazing. So they really do share, and people think, well, I'll go up there and have a license in Canada, and I'll have one in the U.S. And I'm like, nope, can't do it. You have to we'll have one license because they're going to find out. Yeah. But now, how so it sounds like you're pretty involved then with the community. You're the investor community, and I like the fact that you have 600 people already in such a short period of time. Now, do you also have people like you mentioned Alberta? How about Saskatchewan, Edmonton?
We have people all across the country, really that are part of the community, which is awesome. Okay.
Well, how can people participate in that? Is there a website we can go to get information, or you can?
Most of what we do is actually in the Facebook group ourselves. We just find that that's where people like to communicate and connect, and where we share everything. Okay. So it's called Thrive Community, and you can find us on Facebook. We are growing, and again, we're a couple months in, but we'd be happy to have anybody that is interested in learning about investing in Canada and investing in different strategies come join, share, learn, kind of grow together. And then I'd say if anybody is in a situation where you're trying to figure out how to be an entrepreneur, whether it's a realtor, which that is your own kind of business, whether you're an investor or something else. I have a website called lifebalancementor.com that people can come and, find and book a free consultation with me. And whether it's investing they want to discuss, or just, how to find that work life or business life balance, I'm happy to have a discussion with them as well.
Okay. Well, I really appreciate you being so generous with your time and your expertise. I mean, it's been a blessing having you on. And for everyone listening, if you're driving, you can just replay this part when you get home, or just look at the show notes. We'll have these in there. But on Facebook, look for Thrive Community on Facebook, okay? And just, follow the instructions. You can follow, like, and of course, I'm sure there's a button where you push to be part of the group, be a member. And then the website is Life Balance Mentors. Is that correct? Is that .com? Life Balance
Correct.
Mentors. Excellent. Yeah. So I really appreciate you doing that and making that available, Kurt. And again, for everybody listening, when you're out there and you're online and you're on Life Balance, lifebalancementor.com. I couldn't read my own writing here. Or on the Thrive community on Facebook. While you're there, please leave a review on the podcast here. Okay. Of course, iTunes is probably the biggest one, but Apple, iTunes, iHeartRadio, you name it. Whatever channel you listen to, leave a review, because that's what makes the podcast world go around. We all support each other. We help each other. It's a community service. We love to do it. And for you, of course, it's free. If you could do that, that'd be awesome. And while you're there, don't forget to go to globalinvestoragent.com, and it truly is global. We serve investors all over the world. Actively today, 13 countries are investing right now actively with the agents on the Global Investor Agent team. They're all trained to work with you and I, the investor. They're not your typical agent guys. They know how to identify, analyze, and negotiate on and off market deals for you and I. And if you are an agent, this is an excellent way to beef up your income and participate in the world of investing yourself. So you guys do that, and then we'll see you on the next Massive Passive Cash Flow podcast. Take care and God bless.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.